Would an extra $18,000 make a difference for you? That is how much we recently saved a client just on their tax expense alone, which means that their financials for their business were off by much more than that, about 5 times that. And if you don't understand how to properly account for your money in your business, it's probably costing you a lot more than you know. We find mistakes like this for businesses all the time on a monthly basis, and we're fixing their business, we're fixing their taxes. Another instance where I have found so many accounting errors, one was earlier this year, which was one of the biggest material errors we had ever found on a client's financials, where we recovered over $200,000 in accounts receivable. This is money that was owed to them, but they didn't know how much, they didn't know who owed it, and they didn't know how much each of those respective people owed them. And through going through and cleaning up their financials and getting really clear on all of this stuff coming in, everything going out, why is it going out, why is it coming in, we were able to get clarity on that. So we got to do a little bit of forensic on there, but this is why bookkeeping is a very essential need for your business. But if you're getting into where you're making multiple 6 figures, 7 figures, and surely to heavens, if you're making multiple 8 figures, you've already got your stuff on lock. But the amount of people that we come across that are making multiple millions of dollars and they don't probably tells me that even in 8 and even maybe even 9-figure companies, they don't have their accounting on lockdown. And it's so boring, but it's the boring stuff that's the most profitable, right? And it's the little things here and there that add up to the big wins. It's the consistency. And so when we know about personal development in the business world, we know how important it is every day to go through and maintain our routine, and not just any routine, the one that helps us to show up and do the best for our business. And the same thing is true with our financial management. And having very sound financial management is so critical. And that's where we really start with things, is that we want to look at, so I look at things in 3 different tiers. We look at, are we in compliance first and foremost? We got to make sure if we're going to start businesses, we got to make sure that we're tracking income. We're managing our financials in such a way to where we know, how much to report to our tax agencies, whether that's sales tax, gross receipts, income tax. The government wants their money, unfortunately. And so the best way to play the game and to win the game is to play by their rules, but you got to make sure that you're playing by the rules in the first place, or you can't win. And so this is why it's so important when it comes to taking care of people's financial management. And we're not just looking at how can we develop strategies. That's the last thing we focus on. You can't even start to develop any kind of strategies for profitability and maximizing cash flow in your business if you're not actually maintaining your financials accurately and soundly and routinely. And if you don't have somebody that knows what they're doing with that, it's sabotaging your company and you don't realize it. And when you really realize it is months and a lot of time years on down the road, when you get a notice from a government agency or some kind of authority that they are relying on your financial information, and they're like, something just doesn't seem right here. And they come after you and they start wanting to audit your information. And we're all very familiar with the IRS. If you have a business that's 30 days old or 30 years old, we all know who the IRS is. And everybody fears the IRS. But the thing is that you should only fear the IRS if you don't have your ducks in a row. If you have your ducks in a row, there's nothing to worry about. They're going to audit you. They're going to ask some questions. They're going to dive into some records, and you're going to have everything. When you should worry is when you don't have everything. When you don't understand what's going on with your money, when you don't understand how you're being taxed, why you're being taxed, what is being reported. If you can't trust the people that are managing that data and that information for you, you're going to run into issues like the ones that we routinely run into, especially like with this last client that we just finished up their 2022 amendments for their taxes, and that was the end result. And that was just for their share of the income. They did not wholly own the business that was affected, but that was the effect just to them, because you've got to understand that when you have a business that is taxed as an S corp, or it's just an LLC, or it's a partnership, all of that income flows through and is taxed to you on a personal level. So if that financial information is wrong at the entity level, you're going to feel it personally. So that's why this is so important to have foundational financial management of your company, and make sure that you can depend on that information. You trust the people that are helping you with that information, and not just trusting them, but going the step further to being a data-driven CEO, to understanding this information, to having these KPIs, these checkpoints, these targets, these measures that you're looking at in your financials. And that's going to tell you, that's going to be your indicative, that's going to be what's indicative. Listen, indicative of your financial health and performance. Trust but verify. Skepticism has served me very well in my career, and it will continue to do so. And one of the things I like to tell people is to be skeptically optimistic, if that is a word. But, just like I said, trust but verify. So it's like you got to have your measures in place. You've got to have your internal controls. And if something doesn't seem right, ask questions, verify this information, because a lot of times we can fix these mistakes, we can go back and we can make these amendments, but sometimes the cost of being proactive is actually the cost of being reactive is far greater than the cost of being proactive. And paying advisors and consultants and paying a little bit more for a tax professional that knows very well what they're doing, they're really experienced, they're extremely diligent, they're going to ask you a lot more questions, probably get a lot more support from you than what you're used to, but you're going to feel much more confident about the end result than as opposed to going with the cheaper option, or somebody that may not be able to validate their reputation as much. And so these things are so important. So, number one is make sure you have a really good grip on the compliance of your financial information, and making sure that everything is reported correctly, and making sure that you have really good systems in place for the management of your finances for your business. Is everything that is coming in and everything that's going out being accounted for properly? Because just because it's income, and just because it's deposited into your bank account, just because it leaves your bank account, does not mean that it was income or expense. And a lot of times I see these things that when there's material errors, big issues on people's financials, when we fix them, it's usually in their favor. And then there's also a lot of things where it goes the step beyond, where maybe the experience of a bookkeeper may not necessarily be there to be able to see what are things that we should be accounting for that aren't hitting the bank account. And just different expenses and different types of income. And then if you're remotely familiar with different types of recognizing income for businesses, then you might be needing to be on an accrual or in a cash base. And so all of these things, at the end of the day, yes, it's important for the financial strategy of your business, understanding the profitability, maximizing cash flow, but we can't forget that there's always a tax effect. There's always one of the things that I like to remember is that for every action that we commit to, there is an effect on our cash flow and our businesses. And if we neglect to make sure we have controls and diligence and the right people helping us to manage the compliance and the tax needs and the filings and things of that nature around our business, it's going to affect our cash flow, because later on it's going to come back to bite you in the butt with penalties and fees and interest, and even potentially the closure of your business. And that's not what any of us want. And sometimes even, failure to comply properly, that it can disqualify you from being able to get certain kinds of credits and deductions and things of that nature, certain types of entity selections. And so we don't want that. We want people that understand that. And so as your business is growing, as your wealth is growing, we want to help you not only minimize your taxes, but be extremely profitable. But there's a team of people you need to be able to do that. You're going to need a tax professional. You're going to need your CFO. You're going to need that bookkeeper that can do the day-to-day stuff. You're going to need that CFO that can help you develop strategy and processes around the financial management of your company, so that you can keep more of that money that you make. And then that tax strategist is helping you in the bigger scheme of things to keep more of the money that you have coming into you. And then you're going to need your wealth management. You're going to need your estate planners and your trust setup and things of that nature. So understanding when and where these people come into play, that'll be another episode, because that is a whole topic in and of itself. But I just wanted to kind of go through the importance of proper financial management and the effect that it can have, not just on the bottom line of your business, but to you personally, because your business is you and you are your business. And we want to help maximize the cash flow from those things as much as possible.